morning, good morning. Hope all is well. Hope everyone's doing okay. Hope everyone's had a fun weekend. Good morning, good morning. Put some music on. Got a bunch of fun stuff to talk about today. I'm excited. Let's see who we got in here so far. Mr. Henry, Florine, Ismail, Father.
Good morning.
I butcher this name every single time, and I'm gonna get it one day. My instinct is Sufan. I don't know if if you pronounce the E, Sufani. Axel, what's going on? Good morning, everyone. Same thing as usual. We'll start up here in the next 5 minutes or so. Please let me know if my music in the background is too loud. Good morning, Lewis. Hope everyone's doing well. My desk is a mess right now. I've been spending a lot of time up here recently, and I have not been good about taking my cups of water down, so I've got a million different water bottles and cups of water all over my desk. Good morning, Kat. Is it Kat or Kate? I feel bad calling you either of the two if it's not one of the two. Kat or Kate. Okay, alright, that works. Short for Kathleen. Gotcha. I'm gonna say Kat. I'm gonna stick with Kat. George, hello. For those that have sent in testimonials, thank you. Very much appreciated. We will make sure that you guys get some early access. You guys will use it for the first week before everyone else does. So please send in testimonials if you can. If you're very new to the group and you haven't necessarily been here long enough to do a testimonial, that is perfectly fine. That's perfectly fine. You will still have access to the platform when it comes out. Don't hold me to it, but we should hopefully potentially have something to show you guys going into next weekend. Now, next weekend is Labor Day weekend, and Henry will not be here, but we are going to potentially. I'm still going to host a call on Sunday, but we're going to have some introductory video that we send out to you guys, and we'll have the list of the names and emails of those that have already given a testimonial, and you will be able to use that going into next week, test it out. And then the week after that, potentially, hopefully, we can get everyone else on it. So thank you, and please don't forget to send in those testimonials. You'll receive an email with that introductory video, kind of how it works, a breakdown of it, and all that stuff. I'm very, 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 very excited to show you guys this. I'm biting at the tongue. Lewis, what did I miss? For the most part, I don't know the last time you joined, but we're about to release a platform for you guys as a community. It's no longer going to be just this email. It's not going to just be an email kind of thing. It's not going to be tied directly to me sending out emails or anything like that. It's going to be an actual platform that you guys use, and it's kind of a all-in-one access hub for the community, whether it's going and getting links for calls, discussion group posts, stuff like that. Assignments will be posted there. You'll be able to upload assignments there. It's just kind of an all access, all in one uh, platform for the community to start to build. So, it's not going to just be you getting an email from me. It's going to be a lot more professional, and that's kind of where we're going to try to start to build the community. So feel free, if you do have a testimonial, please send one in. We greatly appreciate it. Please let us know where you're from, attached to that also. And anyone who does send in a testimonial will get 1 week early access to the platform before we give it to everyone. Aside from that, does anyone have any questions there before I jump into the news? I cannot say, I'm not going to release the name or what it's called, what the community will be called. Yes, we do have a name. Yes, we've branded it, but I cannot say anything quite yet. I am waiting, and I'm chomping at the bit to get this in your guys' hands. Trust me, I think it's very cool. I think it's very unique. And it's been a journey. How do you join? Well, you're already here, so that's a good first step. But you'll be able to just go straight into it, and you'll be able to sign up and make an account. Type in your email and create a password, and you'll be set to go. And yes, this is all free. It will be free for an extended period of time. We have no eyesight on when we will turn it into some subscription model. We will make sure you guys are well aware, and we don't know how we're going to handle it, how we're going to grandfather people in. We will keep you guys updated on that. But yes, for now, going forward, it will be free. We have no desire to flip it into a subscription model quite yet. There's nothing that we have, and as soon as we know, we will start working with you guys and telling you guys what that might be. But aside from that, it's not something that I would worry about. It's in the back of our burner right now with building it. We want to get you guys in. We want to make sure that you guys are able to use it for a durated period of time. It's not going to be like, oh, you used it for 1 week and it's gone. No, we're working that stuff out. I'm not going to promise that it'll always be free, but at the same time, we might figure out a way to grandfather certain people in and this, that, and the other. So we're working on it, but I'm not going to talk too much about it because there's still some stuff that we have to figure out. But at the same time, it's going to it's going to be fun. It's going to be exciting. But okay, all right. I'm going to go ahead and get into the news. So pretty hectic week this week. Nothing on Monday, but on Tuesday at 9 a.m. we have the S&P Composite 20 HPI year on year. That'll be pretty big. That's one that doesn't necessarily happen every month. That's kind of like a quarterly, yearly thing. So look out for that. See how volatile that is. At 10 a.m., so an hour later, you have consumer confidence and job openings. So Tuesday will be pretty packed there. Going into Wednesday, you have ADP non-farm employment change on top of prelim GDP quarterly, 15 minutes following that, and then you have an index on that GDP quarterly as well. And then at 10 a.m., you have pending home sales month on month. Thursday, you've got core PCE price index month on month and unemployment claims both releasing at 8:30 on Thursday. And then on Friday, you've got average hourly earnings monthly, non-farm employment change, unemployment rate, and ISM manufacturing. Note that we do not have NFP this week. It will be next week, so just keep that in mind. Even though Friday is the first, NFP will take place next week. So even though there are some non-farm news releases this week, it is not necessarily going to be NFP week. So, NFP protocol where you're trying to get in trades before Wednesday AM session and you want to be out of everything by then, doesn't necessarily apply this week. It'll apply next week. But just, keep in mind that it is a very volatile week. So we should have some back-to-back volatility coming that way. Any questions on the news before I get into dollar?
Hey Carson, I'm looking at next week's news events, and I believe there's only like Wednesday and Thursday. If you want to next week, so the following week.
Let me look. I wonder. Then NFP could be this week, but I don't know why it's not popping up on my calendar. Henry, is it popping up on your calendar? Let me look on a different calendar.
Yeah, it is.
It's popping up on yours?
Yeah, it's gonna be on Friday, September 1st at 8:30. What time?
What calendar are you using? Why is this not popping up?
I'm using Econoday. I'll send a link in the chat for everybody.
Well, that could have gone bad for me.
Yeah, it's typically gonna be that first Friday of the month.
So
Send a link in the chat. Everyone can look at it.
Here, I'll pull it up too. Okay. All these tabs.
Employment situation there on Friday.
Okay, all right. So yes, I was wrong. Sorry about that. We do have NFP this week, so I would definitely start to look at that NFP protocol. With that being said, if you go back to the other things that are releasing, if you choose to follow that protocol, obviously don't touch anything after AM session on Wednesday. But very volatile week. NFP Friday 8:30. Not sure why this is not showing up on Forex Factory. Gonna have to look into that because usually it does. Maybe they're just trying to not let traders know that it's there. But keep that in the back of your mind. There is NFP this week on Friday. You've got the employment change, the payroll, and the hourly earnings and the unemployment rate both releasing at 8:30. So I'm assuming that if all of this is occurring on the same day at the same time, Friday should definitely be what Michael likes to call a fireworks show. So keep that in mind. Trade safe. Make sure that you are doing everything that you need to do within your trading plan to make sure that you, capitalize, and that could mean not even trade, right? So please be smart. Please be responsible and know what you need to do and what you don't need to do. And you do have a lot of news following in the first half of the week, right? So there should be plenty of opportunities here. Aside from that, good catch on that. Thank you. I appreciate it. And let's go ahead and get into dollar. Sorry, I gotta let my trading view load. Dollar.
Yeah, we can touch on that as well, Axel.
Okay. Let me share my screen. I'm trading view up. Okay, can everyone see my screen? All good there? Okay. So following from Wednesday's midweek call, we had taken out this buy side liquidity. I went ahead and went neutral on dollar because I wasn't sure whether or not it was going to go higher or lower. But we were studying the SIBI that is derived from the weekly right here, right? Curious to see where we closed above or below it. Obviously, we closed above it, and we did get that higher push. So after going neutral, I, as a trader, needed more information to see where that next direction was going to be. I know that I did highlight this this volume imbalance right here, and if we were going to go higher, that was another area that I thought that we were going to potentially draw on. And as you can see, we ended up drawing through that, created another little volume imbalance right here. So for now, I am actually going to kind of continue being bullish on dollar. I like the idea of us potentially taking this buy side liquidity. With regards to retracements, I liked the way we came off of this SIBI, so I would want us to stay above this area right in here, right? I would not want this to necessarily break if I'm going to remain bullish on it. With regards to where we could potentially retrace on a weekly, you could get an immediate rebalance. I would look to see, keep an eye on the weekly, because if we open and we start to go down, I would like us to potentially use this initial buy side liquidity pool and this previous week's high as support, matches up with the order block right here, the mean threshold, and then potentially go higher. If we can do that, I would be using this volume imbalance as a support resistance flip as well. Going back into a daily, depending on where we open up, like I said, I think if we do go lower and we give a shot to go back above, use this volume imbalance as a potential area where you could see support and resistance. You also have an inverted BISI right here. So you've got this inverted BISI. Now you can see that we've closed through it. We did already use that as inversion, but I wouldn't be surprised if we came and tested it again with how volatile this week is, right? You could come in here and use it. And another thing that's always good is if you come here and you just take the weekly range from this weekly low to this weekly high. You come in, you can see that that 50% lines up pretty well. So even if we did just decide to deliver anywhere into discount, this technically could be used as an order block. You've got some down closure candles in here, right? Propulsion block, order block, and then go a little bit higher. You can line up OTE levels in there to see where they line up. So if price holds this high for most part of the week, and we kind of just mess around in here, right? If we start to kind of dilly-dally, we just kind of can't really find any rhythm. I would expect the market, if we're delivered in here, come the end of the week, I would want price to go higher. Now, if we do start the week out and we come and take here, and we don't necessarily stay above here, and we come back below it, I would want to see some failure swing and a break of structure, then we could potentially go lower. So there's a couple things there, but really my focus is how we potentially deliver to this buy side liquidity. There's nothing here that's really holding it. There is this rejection block right here, and if you basically take the 50% of this, we fell a little short of it, but the only thing that's going to potentially give this a retracement or have this fall back down is going to be this rejection block. I would like to see also, if once we close above this rejection block, once we get a closure inside of that, whether it's a day or whatever the case is, that's going to really start to solidify the fact, for me at least, that once we get back above here, we can close. Once we can close, then I would really want to see price start to really run up into here. But it could play around. Obviously, it's a very manipulative week with non-farm payroll. The first of the week is probably going to be your least manipulative things. So use your new week opening gap. Really see where that open is and how that could potentially line up with any of these levels. Aside from that, that's really all I've got. You know, I don't see price retracing too much. You go in on a 12-hour, you can see we've got a little bit left here. You've got this clear down close candle. You could use the medium or the mean threshold of that, right? You could use the mean threshold of that, which is the lower half of that inverted BISI right there. really this low right here is probably the low in which I would stay bullish on as long as we don't trade and close under that. There is a BISI down here, but it does seem a little far-fetched. And if we do get there, I would want to see price actually potentially act as resistance at this SIBI. So even if we do deliver back down in here, you can see we've got relative equal lows down here. I would want it to kind of stay firm going higher with a retracement no more than this kind of mean threshold area, given a couple bit of given room for wicks obviously, but closure at least I would want to see it stay in and around this area. Give it 103 800 to 103 600, 103 550. I would rather closure stay there and stay heavy-handed to the highs. If we do start to fall and give and take these lows, I will probably look to see obviously this BISI get filled, but then I would look to see if price wants to run to these lows. But for now, I am aiming towards buy side liquidity. We do have a little volume imbalance right here also. You could extend that out in time. With regards to a 4-hour, you can see we still have some room to fill in here. Not much of a, trying to think real quick, just make sure I'm not missing anything. Obviously we've got a BISI right here, a BISI right here, inverted SIBI right here, a large BISI right here. So, you know, it looks like this lower half of this area could be where price tries to or wants to bottom out at if we do get all the way down there. But you can even see, look at the reaction following just hitting this BISI and that mean threshold and buy side liquidity pool area, right? Very sensitive to it. So I'm curious to see how, even when we closed, right, we used that volume imbalance already as support. So very curious to see where it opens up. We probably will hang around here at least till Tuesday since there's no news on Monday. Yeah, that's about it for me. Does anyone have any questions at least? I know Axel has a question on ES, but Henry will get to that. Any other questions on dollar? So far, straightforward. I am bullish. I'm aiming for this buy side liquidity pool. Then I'll reevaluate. But I'm curious to see if we can basically overall maintain exposure to the upside while respecting this parent price swing discount. And we've got a buy side liquidity pool inside of a inverted or old BISI that's been traded through and now back above. And we also have a bearish order block mean threshold that's potentially keeping us higher. Any questions, comments, or concerns there before I give it over to Henry? All right. Mr. Byrne, take it away.
All right. Great news, y'all. We fixed the Zoom so the robot doesn't call everything out anymore. Okay. All right, looking at ES here. So we ended up this week getting that immediate rebalance back up into the candle from 2 weeks ago and having an inside week here, right? So the prior week, sell side liquidity was purged, and then we tapped down into that pool one more time here before making that run back up, and then dropping back down to close the week right around the high of that monthly history. Right from here, we did tap down very close to the consequent encroachment as well, so it makes sense as a point where we kind of put in that low for the week and then return back up, and really going into Friday. This week we had on the daily we had Monday, Tuesday, and Wednesday returning up into the range, Thursday reversal, and then Friday TGIF returning back into the range. Right. So what else to cover on the weekly chart? We've got this series of up close candles here. We can treat as our bearish order block on the weekly, trading back up into that range. and then coming off of that. Remember, we traded back up through this liquidity void on the weekly chart, trading the buy side and then the sell side, and then utilizing it here as a balanced price range to trade back lower into sell side target. And now as we continue looking forward, still going to be continuing to look for lower prices, at least temporarily, until we get a sign that this could potentially go higher. Right? So now we're just going to be looking for sell side under this low, looking for this BISI right here, which is not quite delivered to the prior week, fell just a bit short there. And then also this BISI down here, which aligns with the low of the monthly BISI, and also back inside of this liquidity void, which here we have the opening, trade up and back down, redelivered to about the consequent encroachment right here. And then here buy side was delivered, but sell side has not been. So we could come back in and potentially deliver sell side here inside this liquidity void if we are going to end up trading lower. So just looking for this low and this BISI and potentially this one as targets into next week. It looks like it is going to be a very volatile week, lots of red folder news. So it'll be exciting to see what happens there. Remember, don't get ahead of the news, just let that potential manipulation occur first, and then you can find a way to participate. So on the daily chart, we'll have sell side under this low, which was the weekly low we're looking at. And then this is the weekly BISI, this larger gray box here. And then there's a smaller inefficiency here on the daily chart as well, between this candle's high and this candle's low. That's going to be your June 9th candle. Just as we look into potential premium arrays above, we now have this up close candle here, which we traded into around the mean threshold of on Friday. And so we'll look to see if we want to trade a little bit higher into this range and then potentially look to sell up into sell side down here. If we're looking at what occurred on Thursday, we had our run higher in the earlier part of the week, right? Monday, Tuesday, Wednesday, all retracing up into this range, digging back closer toward a premium of the larger dealing range. And then right here, we have our bearish propulsion block right here. So here we have the order block, and then this candle trades into the order block, and then you get displacement away. So here you can look at the body of this candle right here. Call it bearish propulsion block. And you can see that on Thursday, it tapped right up into there, just 2 ticks above. So this is 44.85, and the high on Thursday was 44.85.50. We also had a larger expansion in the after hours, and the opening range gap was in a premium on Thursday as well, right? So if we look at the regular chart, see here's where we closed on Wednesday, and then we had that gap opening higher, trading a little bit up, creating that Judas swing, and then dropping back down. And we were trading up here in the after hours as well. So at a great premium on Thursday and still looking for lower prices. So then we had a real sharp reversal off of that in a hurry to close the week down below these lows. So we can go a bit more into this price action, what you can potentially see up here as a trade opportunity, but it did run very quickly. So you can see too, this is a signature you can look for when price is likely to run quickly, is that immediate rebalance, right? So we had that on the weekly chart. And then here, if you look into the hourly chart in this price action on Thursday's move lower, we'll trade up above these highs, drop down under a short-term low, establish an order block right here. And then as we get into the open, we're trading into that order block, and look at this candle's low and this candle's high right here. So we get an immediate rebalance, and then it's going to move quickly away from that as long as we have a sell side target. can see this delivery only took about 2 or 3 hours to get down to towards sell side liquidity. We saw too earlier in the week, or Monday, Tuesday, yeah, Monday, we were utilizing these cities on the daily chart, right, that we created here. Or let me go to the daily so you can see it. This one here and this one here. If we look into the lower time frame price action here on the 1 hour chart, this was that range we were talking prior week's call, dropping down under sell side and then trading back up, utilizing this as an inversion to trade up to the higher city on the daily chart right here. Notice the respect for it and the candle bodies right there. Dropping back down into this range again, tracking all the way out, using it here, inside that breaker as well, and then trading back up through. See, once we get closure above this, using that as an inversion right there, and then trading above these equal highs and into that propulsion block on the daily chart. Then we drop down, hit that displacement, immediate rebound, back down. Now, after we again, now this has been delivered on the buy side and the sell side here, and you can look into this range to see if there's a potential setup there as well. Let's see if there was anything. So right there, we get the closure below, and then we get an institutional order flow entry drill right here. Your sell with your stop above here. At this point, you'd only really want to see retracement to that consequent encroachment. So you'd be safe with a stop above here, and it continues to move away very quickly. Does that touch on your question, Axel? I'm sure you answered there. I think that pretty much covers it on ES. If anyone has any questions about this. So again, just going to be, I'll talk about if we trade higher. So yeah, just again, looking for sell side under this low and these inefficiencies here. On the daily chart, where I would start to go against this bearish idea is if we do get closure back above this high and above the mean threshold or the high of this propulsion block as well. Right. So until that happens, still looking for lower prices to be delivered into the sell side here. Right, so I got in on the IOFED for 1%, but didn't hold because I didn't know it would keep going that much. Yeah. So yeah, I mean, that's good. And right, you don't have to be a participant in the whole move, but you can start to recognize some of these signatures like the immediate rebalance to know that you can, you're likely to see that more expedited price delivery, right? And then also just looking at the time of day and seeing where we could potentially deliver to into specific times, right? Like if we're having this early expansion in the day, you can look to see where price will deliver into that lunch hour. Because right at 12 to 1 is when we're potentially going to have that retracement back up into the range, which is what we saw here. So this is your 11 a.m. candle on the hourly, trading right down into this bullish order block right here. And just shy of that range actually. But trading down here, so right as we get to noon, put in the low right there. Then 12 to 1, get this retracement higher, dropping back down, and then continuation into that afternoon expansion down into the close of the day. That's a great entry though, Axel. Well done. Any other questions here on ES?
Do you want to go over, did you already go over your trade?
I didn't touch on mine yet. I can go ahead and hop into that.
For the task this week? we'll go over all the tasks completed this week, and then we will get into the task for next week.
I actually took a loss on my trade this week. So I'm in a little bit of drawdown right now, but that is okay. It can be recovered in time. Hold that other one up a while. Right, so oops. Okay, so here's my trade idea. It was on, let me check, August 23rd. I think it was on Tuesday. No, it was on Wednesday. Wednesday on NASDAQ, I was still looking for this sell side to be delivered down here under these relative equal lows. We traded higher in the London session, but in the London high I was expecting, drop back down, nice displacement through these lows. We have our bearish breaker in here. So we got high, low, higher high, dropping through. Bearish breaker, dragged it out in confluence with these cibbies right here. And I was just entering short on this move higher into that M5 city right there. And then this day, actually, I was incorrect about the bias, and we ended up trading all the way up to toward these highs. So I took my short right here, and then just took my stop above the breaker. And there's my balance. So in a bit of drawdown right now, about $600, but that can be recovered on a trade. So all good there. Not even down 1% yet. So just need a 2-to-1 or mitigate half the risk, half the size on the next trade, and then we'll be right back good. So no worries if you take a loss, right? We can always recover it, and then it doesn't need to be a rush to do so. Oh, I'll touch on my details here as well. So using that M5 M15 city to target the sell side and equal lows down here. This was like a 15-minute 22 model essentially. Not so emotional in trade. I mean, this is a trade I would take a lot of times, so not worried about it failing there. It's just not one that's going to work. Incorrect about the bias, so it didn't play out my way. And then something to do is just giving a bit of higher attention to those high time frame levels, right? So here initially noticing that my stop placement was right at the low of this city on the daily chart. So even if we were going to trade lower, that's a potential level that could pose as resistance to trade back into these cool lows down here. So ideally, I could have got a bit more of a premium entry, but either way, this did end up trading back through buy side.
Not bad.
Any questions on this trade? No, I'll pass it over to Carson, and then we can hop into all the trades that you all submitted.
Alrighty. So my trade this week took place on Thursday. Before I get into the trade, I will go into the weekly just to show you guys where this blue range that I'm playing in is. So if you go into a daily, you can see that we have this BISI right here. Okay, so we have this BISI. When I go into a 5-minute, we had already collapsed, or we had already inverted it, right? So price had traded below it, but came back above it. So I was actually long with the idea that we had came back above this entire weekly BISI, and we were very deep into it. And then from there, I was expecting I had a clear draw on liquidity. We had filled this. We had filled this BISI right here too. We were in that third quarter of that BISI on the daily, and when I go into a 1-minute, this was kind of the model that I was looking at. Kind of the same model. It wasn't as clear on obviously aiming for 10 handles. Oops. Obviously aiming for 10 handles, and I can tell you where I went break even. So draw on liquidity that I was aiming for, even though it was more than 10 handles, my take profit was at 10 handles, which was a little bit, 10 handles I would say is right here. Yeah, so this is 10 handles from entry. So that's 10 handles from entry. This is this dotted line is the third quarter point of that daily BISI. Price comes into it. We're about to go into the 950 macro. You can see that we have a breaker here. So we have a low taken right here, right? So we have a low, a high, we take out the low, and then we displaced, right? So it is a higher risk entry. It's a 1 minute market structure shift, right? So you can see that this low was taken. We shift, taking this high, right? A lot of imbalance right here. A lot of imbalance right here. Price comes back up, or price comes back down into this BISI inside this breaker, right? That's my model. I like it, even though this is not as clear. It still is there, right? You have the low taken, and when we took the high, there's displacement inside the last highest I've closed candle. Obviously, 5 handles from stop loss was 5 handles. I believe 5 handles was right about here. So that was where my stop loss was. You can see that I'm entering in right here at 44.53 and a quarter, right in the middle of that BISI is when I'm pressing that button. 1 minute of drawdown, and then it was about 1, 2, 3, 4, 5, 6, 7 minutes until that take profit was hit. Obviously, this is a counter trade. I'm catching a retracement, and even though my main draw on liquidity didn't actually get hit, if you can see right here, that stayed open. The 930 open did get hit. And if you actually go to a 5 minute, once we got inside this SIBI right here, and we got to the consequent encroachment of this entire weekly range, that is when I went break even. So I went break even on this candle right here. Once price delivers to the consequent encroachment in this candle, once we deliver up to there, this goes break even. So my stop loss did not move until we had closed above that break even, or above that consequent encroachment. You get one tiny little retracement back into that consequent encroachment. You can see how it respected, and then we delivered into the 10 handles. So was not with the trend, was not a seller in a seller's market, but I was able to capture 10 handles. I was able to be profitable in the trade. If you want to see right here, this is my account history. This is for the first week. This is from the second week. Right, you can see the dates on it. So I am 2 for 2, but that won't necessarily last for long. We will see what next week brings. Yeah, right. So that's my model, right? To me, we were deep in a discount with regards to being inside a daily BISI after already trading above it, right? So when we're coming back into this BISI, we're coming back in after price has already respected the outside of it, right? We came back above it. So I can show you guys kind of what I was thinking in my head, right? We've got a daily BISI right here. We've got the consequent encroachment of it. Oops. I guess I could just use the Fed. I'll just take this off. Take my extensions off really quick. Right? So we have this BISI on the daily, right? Price came up, created that BISI. Price comes back down, and we're kind of trading through it, right? By this time, right, when price comes back down into here, we're now considered at a discount, not only within this range, right? Not only within this range, but also within the BISI. So I'm looking in here. This is where that 1 minute model unfolded, right? What was that model? You have a low, a high, you took out the low, you took out the high, and there was displacement in there, right? There was a BISI in there, right? So this is occurring right here, right? My break-even protocol is once price delivers to the consequent encroachment of it, I'll go break even. And then obviously from there, you know, that was probably about 10 handles. So this entirely right here is the trade this was the trade. Notice how I didn't necessarily need it to go all the way up here and go higher. It didn't, right? It was actually just a matter of fact of, you know, 2 more handles going higher and then we went lower. But I was still able to capitalize. It's the same process. It's the same idea, right? My model was there. I had higher time frames framing towards it. I had a reason as to why I was using those higher time frames, right? Using it as an inverted model, being, you know, inverted as in it's a BISI, so I'm using it as a BISI, but it had already been traded through a couple times. So it's kind of like I don't know how you would use it. I'm using it as a regular BISI, but it had already kind of been traded through to the downside and then back to the upside. So after it was already inverted, it reinverts to the regular way in which you would want to use it. But I only caught a small little retracement. And the only reason why this trade was successful, one, was time, right? When did this trade take place? I bought in at 9:49, and there's that 10:50 macro, or 9:50 macro, right? Before 10 o'clock, I was already out of the trade. So I'm using time. I'm using this model right here. This right here is the same thing as this, right? There was that BISI, and that highest up close candle was a breaker, right? So this is occurring right here in a time that I want it to, in an area on the daily, which is right down here, that I could potentially see price be sensitive towards. It doesn't mean that it has to go in the intended direction for the rest of the week, but it gives price a reason to bounce off that level. From there, what's another thing that I could have potentially looked at? Well, I had clear draw on liquidity, right? These relative equal highs. Even though it didn't necessarily hit, you have these clear relative equal highs, and you have a long wick at the 9:30 open, right? And what were we doing all day, right? From market open. From 3 o'clock on, all we did was go down. So price is due for some sort of retracement, even if I'm not right. And even if you go and look at this and you see that we have a SIBI right here, this was another reason why I knew I would at least go break even on it, because we had this SIBI right here, a big volume imbalance right here, a small volume imbalance right here. Price is just super displaced right here. So the idea that price could at least retrace up into here gave me a reason that because it's above consequent encroachment, I can still go break even and at least give the trade a shot. Right? It might have just went up. It could have just came to the consequent encroachment and then basically went back down. I still would have been at break even once it hits that consequent encroachment. So I'm at least able to see the trade play out, learn from it, and still somewhat be safe, right? The idea that it was just going to keep going lower was not sustainable enough to my end to where I figured it was worth the risk, right? Everything leading up to that point gave me the idea and the evidence that it was at least worth the risk to give it a shot, to see that it was going to potentially trade up to the consequent encroachment. And then from that standpoint, once that did occur, I'm going to go break even, and I'm not going to have anything attached to it. I'm not going to be as emotionally attached to the trade. And if it does decide to go higher and hit my 10 handles, great. If not, it's a learning lesson and I didn't lose any money. Any questions there? All good? Alrighty. Let's look at y'all's trades. One second. Okay. Okay, here we go. This week's trading tasks. Henry, you want to do what we just did last week and just keep switching off? I'll do the first one, you do the next
Yeah.
one.
Sounds good.
All right. So first one. Here's the journal part of it. Happy that I can make a plan on Sunday, wait, and execute accordingly. Though I must admit I had all sorts of negative thoughts not trading on Monday, especially seeing others win. The rules were new and challenging for me, but they seem to be doing a good job keeping me within a realistic range to stop loss / take profit. I also like that it seems to get easier to find both entrances and targets. I still have fear in the back of my mind I'm going to lose. Maybe I should lose on purpose. Just kidding. Well, there will be an assignment in the coming weeks where you intentionally put yourself in drawdown. So that is coming. You know, we will all lose a trade or so at some point because it will actually be part of the task to go into drawdown. But that's in the far future. But I'm glad that you were able to make a plan, wait, and execute it accordingly. No reason to have negative thoughts on trading Mondays. I have not traded a single Monday in over 2 years. I don't trade Mondays. I've missed great trades, but I've also saved my ass plenty of times not doing it. I don't trade Mondays. That goes away. The only way it goes away is by not trading on Mondays, right? The more you don't trade on Mondays, the less negative thoughts you'll have because you'll start to realize, yeah, other people might be making money, but there's other people losing money. That's the game. There's always people making money. There's always people losing money. So just because it's Monday doesn't necessarily mean you're missing out. You're not missing out on anything because yeah, there's people making money, but there's also people losing money every single day that the market's open. No reason to have negative thoughts there. But I'm glad to hear that. Going into here, it is a little blurry, but we'll see. Obviously, he's playing into a SIBI, playing into a small little SIBI on a 5-minute here. It is a little blurry. I do apologize for that, but you can see he's aiming for that previous day's high, right? So he's got a quick entry right here inside the 9 o'clock. So it looks like it's just before in and around the 9 o'clock area. Price pushes up into the SIBI, straight directly into the previous day's high. He's also looking at the midnight open, and you can see he was able to gain another 0.5%. I know it's a little blocked right here. I had something popping up, but you can see that he's at up a total 1% on the account, right? First week he got 0.5%. This week he got 0.5%. That's great, right? He didn't have to get the full percent. It's not a problem. But from there, he was able to maintain, profit on the account. Easy SIBI. You can see he's also coming off the SIBI on a daily. So he's seeing price trade away from that SIBI, creates a SIBI inside a time frame that he likes, and he has a clear idea of where he wants it to go, which is the previous day's high, and it delivers straight into the previous day's high. Great trade. Very easy, low hanging fruit. I like it. Henry, you got this one?
Yep. Here's this week's task. Overall, I'm indifferent to the result just because I made a small miscalculation. It happened. There's nothing I could do about it after the button was pressed, besides keep looking ahead. I like that. Bias was correct, even if it wasn't. There can be an argument made that I should have waited a bit longer to take the trade, but I saw something in the market that looked clean at times. Thoughts maybe it would be fair to describe my mindset as leaning more toward excited, positive than neutral. It's fair feedback last week. All right, let's see it. Okay, so price was trading into a 15-minute and a 4-hour and a daily SIBI. Price made the initial high of the day and as a perceived Judas swing. Okay, I see that. It's like the 9:30 run up and then looking back toward the sell side. So I expected it to trade lower as DXY started taking short-term highs. Saw this as an opportunity for price to trade lower in the US 100. Used a perceived bearish order block as the entry. Mistake got in at the wrong side of the macro as price wanted to trade 70 handles higher, and it filled up August 16th new day opening gap. Okay. Yeah. So, I mean, you traded your model and it played out as a loss, and that's perfectly fine, right? So you got that 9:30 Looks like we were looking at this as a 930 Judas swing and looking for it to trade back down to the sell side right here. Hit that 15-minute city and then your order block right there. I don't think you had the wrong idea. I mean, it was just, yeah, just in terms of timing and wanting to reach up into this higher target. Because I mean, you do even get that correction you were looking for right there, right? Take your entry right here, and then you purge sell side right there. So that can be, as you look into this trades going further, this can potentially be a point at which you decide to either cut your losses or profits early or potentially reduce your stop loss, right? Like when you see sell side purge here and then the closure all the way back up here, and then no immediate attempt to drop back down, at that point, you can potentially, this is something you want to back test, right? But because you'll have opportunity times when this kind of thing occurs and then price drops right back down. But you can back test it and see how this is potentially an opportunity to bring your stop loss in maybe above your propulsion block right there, right? And you can potentially reduce the loss on the trade. But I think you did well. I mean, you traded your model, and not every trade is going to be a win, and that's perfectly fine.
I'll also note too, it takes a lot more discipline than you think. Notice how he said he got in too early, but realistically he would have gotten in again at that institutional order flow entry drill above, up here coming off the new day opening gap, but he didn't, right? He still followed his rules. Even though he knew that and he saw his target eventually get in, he saw his target happen off of an area that he probably would have gotten back in, but he knew that it was against the rules, and so he just let it go against him. That is good. That's a win. That in itself is a win. Even though you saw what price was potentially still going to do in an area where you probably would have entered back in, you just let it go without you. That's good. That's building something that is hard to build when you're able to sit there and let price just go. Even though you know 90% of the time you're probably going to be right, but you're not going to press that button because you know that there's another trade and you'll be right another time. So that right there to me is actually the biggest win in all of this. I'm not looking at this last thing where it says result loss. I'm not looking at it as a loss. I'm looking at it as a win because you'll get that money back eventually. That's just the tax of doing business in the markets. But you, as a trader, manage yourself more importantly than you did your trade, right? The trade is whatever, right? You managed it how you could, right? You had a stop loss, it hit, whatever. But you managed yourself, which is more important, right? You had a lot more discipline than just, you know what, I'm just going to go back in and I'm going to get in it. No, you knew that you could only have one trade and that was it. And you didn't necessarily go against your guns. And to me, that's a win. So good job.
Well done.
Next trade. Oops. Okay. So this was at 3 a.m. We've got some Forex business going on here. 3 a.m. New York time. Duration, the sell was 8 minutes. I'm a little, hold on one second. Okay. Duration 8 minutes, sell 8 minutes, buy 10 minutes. Entry, market structure shift plus fair value and breaker. Stop loss high of the immediate range for sell, low for the range of the day for buy. Target for the first trade, my risk was 10 pips, so I was targeting 20 pips. On the second trade, I was using half the risk of the first trade. Stop was 12 pips. Emotions, before I felt a bit anxious taking the trade, I knew I needed a little bit more information, but I just felt I needed to trade today. During, I was calm. During the trades, let price stop using it. After, I felt happy I took the loss, and I've learned yet again that my trade has to align with the higher time frame movements, and if I'm not sure what the draw on liquidity is, I should be patient and not jump into trades blindly. So there's a couple things here, right? Risk is still there, even though you took 2 losses. That's fine. You're still within your risk parameter. I will say the first thing I'll point out, we only that specific task, you really only wanted one trade, right? We only wanted you pressing that button once. Even though you did it twice, that's okay. Try to just get it down to 1. I don't know if you were trying to split it or whatever, but it was a 1 shot, 1 kill. So whenever you see that, that's just one trade. We want you to just one trade, and it's not It's not more of trying to see whether you're right or wrong. It's just more of patience, right? So I'll go into there. I'll go into your emotions before. You felt anxious taking the trade and knew that you knew that you needed more information, but you felt a need to trade today. Why? Why? You didn't need to. You don't need to do anything, right? It's that feeling. You just want to feel something, right? You just want to feel something. And I think something that is key is knowing that you feel that, right? I've talked about this time and time and time again. It's that awareness. It's that self-awareness. If I ever feel like I need to get into the market and prove something or feel something, that is a huge signal for me to not trade, right? And let's say you get into Friday and you feel the same thing. Well, you're better off coming in and just saying, you know what, I couldn't manage my emotions enough to get into the market this week. I didn't place a single trade. Huge win. Huge win. Right? You're so self-aware that you knew that odds are if you got in, you would spiral or whatever the case is. Even though you didn't spiral, you still kept risk there. It's the idea. It's this I needed, even though you knew. So there's these two sides of you that are playing back and forth with each other. The side of you that knows that you damn well probably need more information, and that other side of you that says, no, you know what, it's probably okay, it's fine, it's enough information, I just want to feel something. Though it's those two that are always going to be battling each other, and you need to just know that when you are battling that, and you know that you can't lopside it into the correct side, just sit back and relax. There's never going to be a time where you're going to be wrong or be shunned when you come in to a call or you show something and you just say, hey, listen, I couldn't overcome my emotions, so I just couldn't trade this week, right? Every time I was about to get in, I felt anxious. I felt like I didn't have enough information. That's perfectly fine. You'll learn from that. And I guarantee you next week, there's still obviously whatever. Overall, still great trades. You still have a rhyme, a reason, right? On the sell, you had a market structure shift, but then maybe go in and back test and see, okay, what was occurring down here? Is there something on higher time frames down here that pushed this a little bit higher, right? And then also, did you have a little like this entry right here? This is not the entry. This took you out. So you had a sell right here, stop loss right here. I see the breaker, but also like I said, was there? I'm not sure if there was news events or anything like that. But it looks like price was just kind of ranging right here, and that's a hard market to trade in, especially when it's ranging. I would just say two takeaways that I can give you both on the good and the bad. Good, you managed risk, right? Even though you had back-to-back losses, you only lost 0.5%, right? You've lost less than Henry has, right? Totally able to it's obtainable. You can make it back. You can come back from it. It's just being patient. Because now you have to realize this is just the reality of it. Now that you're down on the account, now you're going to fight another side of you that says you need to get it back. Just like you knew you needed more information and you felt the need to trade, now you're going to feel the need to make it back, which means you're going to need to trade more, which is not the case. That's not correct. You need to just be patient. It's something that you can make it back very easily. When we go into the task this next coming week and we talk about it, it's something that you can make it up this past week, right? It's something that is very easily obtainable. And I think it's something that you just need to work on. How do you work on it? You don't trade as much, right? You don't trade as much, right? Especially like the task was one shot, one kill. One shot, one kill. One shot, one kill. One shot, one kill. Which means if it's a one shot, one kill, that means you're going to need to build that case as best as you can because you got one shot, right? So I would say you can always go back and you can repeat these tasks, right? These tasks are here for y'all to repeat if you want and go back and try to do things again and again. But my biggest thing would say emotional awareness, right? Don't just instinctively act on how you feel. Man, if I lived my life and made decisions and actions based on how I feel, I would get nowhere in life, right? Because feelings are just feelings. They're not even real. Like, there's a logical way to do something, and then there's an emotional way to do something. And you're always going to conform to the wrong side of any sort of market action if you just go with how you feel. Because, quite frankly, traders aren't, or humans aren't meant to be traders. The game of trading is not meant to be in the hands of someone that is very human, right? Because when you have emotion tied to things, you don't rationally make the correct decisions. You have to know that. The worst form of trader is a human, right? That's why they say trade, like, you need to be robotic with it. Because if you pair a robot up with me and we have the same exact knowledge, if there was an algorithm or a robot that knew everything that I knew and traded against me, he would beat me every single time. Why? We have the same amount of knowledge. We have the same exact amount of knowledge, the same amount of experience, but it will always beat me. Why? Because that algorithm, that robot, that software doesn't have emotion making decisions. It just has a set list of rules that it follows over and over and over and over and over again. It does not have emotions. So it'll always beat me. Even if I'm just as good, I'm still going to make some emotional decisions that won't necessarily benefit me in the market. But it's limiting those and having them happen very small when they do, and they don't happen every other week or every day. But overall, I will say if there's something to bring out of this, it is that risk is still at your fingertips, right? You only lost 0.5%. That's nothing. So just keep working at it. And, the technicals will come, but you need to fight those feelings of needing things out of the market. You don't need anything. The market doesn't owe you anything either. Just because you need something out of the market doesn't mean it's going to give it to you. Trust me. Overall, good job. Keep going, and you'll get it, I promise. Henry, up.
Okay. So this looks like it was on a Monday. After price was rejected from the hourly order block, bearish order block, I expected a sell program. I entered based on a fair value gap, bearish breaker, and market structure shift targeting the high of the daily city. I also anticipated the new day opening gap would act as resistance. I secured a small win in the morning, which influenced this trade. I was highly motivated both before and during the trade. Taking a loss didn't upset me much. It's good. I certainly need to exercise more patience, especially when I'm on a winning streak. Okay, so it looks like, right, you had your initial purge of liquidity and then drop down and you're using, okay, the entry was a fair value gap, bearish breaker, and market structure shift. Okay, so I see you had that purge here, another purge here, and then your shift in market structure under here. It looks like your entry was taken down here. I don't know if you want to come on or not. We're using this as an inversion, potentially. It looks like maybe that was the case. Either way, it look potentially you could look for a little bit of a higher entry after you get this displacement right here. Maybe looking for price to trade up into this fair value gap here. But I don't think you did anything wrong, right? You have a purge, you have your shift in market structure, and then you're looking for an entry to come down towards sell side. So
One thing
again,
I could
just another case in which you take a
add,
trade and it doesn't work out.
in this trade, one thing I'll add to counterparty to counterparty it is the time in which the entry was taken. Right? You're so late in the day, you're so late in the PM session, and it wasn't a day necessarily within FM or FOMC. So you're so late in the session that the reality of price retracing all the way back in the range is going to be a lot less significant than rather it potentially happening, right? Odds are, even though everything set up in the trade is perfectly fine, you did have a minor shift in structure. but it is only a 1 minute shifted structure. So you have to you need to just know that that 1 minute shifted structure, just like my trade, right? It's a higher risk trade because we're only aiming off of a very small significant piece of structure shift. It's only a 1 minute structure shift. If you go on a 5 minute, it's not a 5 minute structure shift. And it's also so late in the day that price could very easily just be continuing, because if you look and if you actually parent price swing this low and this high, that's delivering right in and around equilibrium. So the entry itself, you're taking it at equilibrium, which is not good, right? We either want to be taking trades in discounted ranges or premium ranges, and you're in the middle of this range right here, right? This low to this high, if you were to fib that, you're right in equilibrium. So even if it was right, it's 50-50, right? You're at the end of the day, you're at the equilibrium of the current range that you're in. So it's a toss-up, right? You want to make sure that when you're in the market, there's so many things that you need to consider on how the odds are going to potentially weigh out in your favor. And even if you are in the right time, even if you have everything lined up, when you're in, try to get really familiar with what price swings am I actually playing in? What is the price swing that I'm currently in? And where am I with regards to premium, discount, and equilibrium? I always am trying to see I'm always trying to line up 3 or 4 different price swings on 3 or 4 different time frames to make sure that I'm not too much in the equilibrium. Now, if you're in a discount on one price swing and in the equilibrium of a bigger price swing, that's different. But when you're at the equilibrium of a very small price swing, it can be 50-50. It can be kind of even keeled. So just keep that in mind. But overall, great trade. You had a round to a recent. I would just say 2 things to focus on is checking parent price swings and seeing where you reside with regards to smaller price swings and how they are maybe playing in equilibrium, and also just time, right? Because now you're only giving yourself a small amount of time to potentially have this trade play out because the session's running thin, right? We've only got X amount of time before that session ends. So, it's a toss up, but overall it's still a good trade, right? You had a model in which you were potentially looking to play. You played it. Guess what? You got stopped out. Not a problem. It counts at break even, right? Notice how this risk stuff starts to tie in. It allows you to be a student. It allows you to learn. These are the things that you learn. This is how you get better, right? And you can get better without having to deal with the emotional stress of, oh my gosh, I just lost 5%. I just blew my account. No, you're learning responsibly. This is how you guys learn. This is how you are able to go day in, week out of the markets, not necessarily just trying to win 100% of the time and still be a student and learn and refine and get better, right? So I think it's overall, there's nothing wrong. I like the idea of the breaker, right? I see the market structure shift on the 1 minute. I see the liquidity taken on the high where you have that line with the X. You can see how price was already sensitive to the medium threshold of the order block that you were looking at, right? So you have things in your favor. I see that you were targeting at least to the new day opening gap, as well as the daily SIBI high, right? You've got all that stuff. It just is going to take a little bit more refinement, To say that trade wouldn't have played out at 9:30 or whatever the case is, there's just so many other things that might be there that kind of give you that idea as to why price didn't go the way it did. But guess what? It didn't. You lost, but guess what? You manage your risk. And that is the number one part of the game. You manage risk. If there's anything you guys can get out of this stuff is, yeah, I lost. Yeah, price didn't go the way I wanted it to, but I managed risk. Keep that on your shoulders as a chip every single time. Right? Never give in to the risk side of things. Because we will always continue to praise you for risk management. Win, loss, you'll notice that we will always continue to pat you on the back and tell you good job for making sure that you stayed within your risk parameters, right? And this is stuff that you guys are going to have to take live one day. You're going to have to take the same idea and go live with it one day. So overall, great job. Alrighty, so here we go. We've got E-mini NASDAQ on a 1 minute. New York AM, 25-minute trade. Entry was using a previous day's high within a BISI. Stop loss was the previous order block. and break even went at 10:23 a.m. Targeting buy side liquidity at 15,166, but they got out earlier. Our motions before. I'm not at all used to holding trades for longer than 5 minutes, as I usually exit after 10 to 15 points. I was very nervous going into this exercise, knowing that I would need to catch a very good trade, likely with higher time frame sponsorship, to reach the profit target. During the trade, when price closed above the BISI for the first time, it reinforced my bullish bias. My trade idea was that previous day's high and the BISI would hold us, so I had a limit order at the previous day's high. It was a bit nerve-wracking to see price wick below the BISI after my entry. The only thing that gave me comfort was seeing the candles mostly closing within the BISI. Price finally pushed above it, but it was high resistance as we kept playing around the newly formed order block and a small fair value gap before breaking out again. After the trade, I was so relieved that it was over. I didn't really enjoy sitting through all that back and forth, but I'm so grateful for this exercise. I would have never been able to hold a trade like this if it was just practicing on my own. I would have probably just closed the trade at the first buy side liquidity near 15,144. I'm also proud that I was able to interpret price as each candle was printing and use that information to gauge the validity of the trade. This wasn't a great trade by any means, but the experience of letting it play out was very valuable, right? So she's got this BISI. She's using this candle as an order block, right? Price comes up, creates a BISI, price pushes back down. As you can see, she's entering in at 15,199. So she's entering inside the BISI at the previous day's high. You can see it very highlighted, or you can see it very kind of fine in here. Previous day's high inside the BISI. She's entering right as price comes down to that candle. Her stop loss is right here at this order block that she does not want to see get met. Price can kind of consolidates, oscillates, gets close, but does not hit it, right? Did not quite hit it. So stop placement was good for this trade. Stop loss moved to break even as soon as we closed above the BISI with strength. So obviously she finally gets the follow through that takes this high. Obviously close above the BISI. She then moves it to the consequent encroachment of the BISI, expecting price to at least be heavy-handed and go higher. Normally she would have closed at this buy side liquidity, but due to the task she had to stay in longer. So now she's break even. She's just letting price consolidate. She's not as nervous or not as confused as she would be, because she's just making sure that price doesn't close back in here, right? She's already break even on it, so now she's just watching, and she's basically in her mind saying, hey, there's no BISI off this that we could fill, so as long as price just continues to just close outside of this BISI, it's probably going to go higher. Price does not come into the BISI, has a little bit of sensitivity right here, but does not close or anything inside this BISI. Patience is created here. Good trading habits are created here as you're in a trade and you're just waiting. Price then obviously delivers towards her next buy side target, and she's able to then take out right as it's about to deliver into the buy side liquidity pool. So great trade, right? Sounds like you got a lot out of it. Looks like you're up on your account, right? You're at a little under a 1.5%. So great, not a problem. All's well there. I think this is a great trade. Axel said that's a sexy trade, so there you go. Getting some love there. So it sounds
That
like
is a great trade.
it sounds like within this trade, obviously technicals played that they should, but you got a little bit more patience than you did before out of it, and that's good, right? You fought that idea of trying to always be in there for 10 to 15 pips. Hey, you proved, or 10 to 15 points. Hey, you proved yourself you could go a little bit longer, and it'll still do what you want it to do, right? You can hang in there for a little bit longer and let price go to that next buy side liquidity pool, right? That doesn't mean you have to hold it for hours and whatever, but you can stretch your trades out a little bit more, get a little bit more profit than you think you could, as long as all it takes was a little bit more patience. It took a little bit more understanding of seeing where those closures happen in the candles to guide you through that. And good things happen when you make good decisions. So good job, congrats. Can't wait to see what you do this next week.
Well done. All right. Earlier in the AM session, we rejected off the daily order block, daily bearish order block, and traded below the daily SIBI. I was thinking this run up is just a retracement to take out stops. I was expecting price to trade up to the lower quadrant of the daily SIBI and then continue lower. As price kept disrespecting bearish PD arrays, I was expecting my stop to get tagged, but it didn't. I then moved my stop to break even when bearish PD arrays started supporting price. And we had a 1 hour SIBI above these relative equal highs. Looking back at the trade, the idea was valid. Could have waited for a better entry. It wasn't a great risk to reward as the task was only to aim for 40 handles and a 25 handle stop loss. So it looks like your entry was inside of the SIBI. And it's, let's see, you went to break even when bearish PD arrays started supporting price. So it looks like you went to break even around.
So as soon as we left the breaker again, like you see that
That's weird.
inversion,
Okay.
we created like a little order block, and we started wicking from the bottom of this SIBI. I was looking at the 1 hour time frame. There's literally a 1 hour SIBI above all these relatively equal highs, and I just realized I don't have the best entry, and I
Yeah,
said,
that's smart.
I was like, I'm just
That's
gonna
smart
go.
then. I think that's great. That's the idea of mitigating risk, right? Because we're always, you can, if you have a really systematic model, you can enter a trade just with the expectation that I'm entering, I'm going to let it play out either to my stop loss or my target. But you can also, as you gain more experience, and it sounds like you have here with the way you executed on this trade, you start to use your discretion a little bit more and recognize certain things that are occurring within the price action. So you are setting up these equal highs right here. I'm not sure what time this is occurring at on this move back up here, but is there any information on that? Doesn't say, but I mean, especially if you're coming back into the lunch hour or something.
Sorry,
Are you looking for the?
forgot I was sharing screen. 1 second. Sorry about that.
Okay. Yeah, especially if you're coming back in to the lunch hour, you could potentially see that retracement on the stop. So I think that was wise for you to go to break even at that point, because now
Even
you're
though I
seeing.
got a little bit confused. I think I attached another screenshot with the email after this. So the idea ended up working out, and we never took these highs out. We ended up rejecting right there from the mean threshold of this order block, and it just kept consolidating for like 30 minutes, and then it went for a sell side. But question to you guys, since after you go into a trade and after realizing that the stop is a little bit more than what it should be, because now it's not even too risk to reward, would you still hold the trade and just accept the fact that, hey, I just got a bad entry and I'm going in with the idea if it takes me out, it takes me out. If it doesn't, it doesn't.
Well, I think you can adapt as the trade is playing, right? Like if you're expecting this SIBI to provide your trade idea. So it looks like where was your initial stop loss on this trade? I get it was above these highs.
Yes, above the 5-minute swing high.
Okay, so you had this retracement almost taking you out right here, and then this move back below. I think at this point you were, I mean, here, this is the idea that we talked about earlier, like on a daily chart, right? So you have an inefficiency, and then you're trading the buy side right here, and then the sell side right here. So now at this point, it's redelivered here, rebalanced here as we trade away from it. You want to see respect price no higher than the consequent encroachment of this inefficiency, right? So you get that right here inside of this little SIBI as well. At that point, you wouldn't really want to see price trade or at least close back above that point. And so after sell side was taken down here, I think you did a good move to break even right there. If you then got closure back above here, and hadn't already moved to break even, that's a good point to potentially cut this trade, because now you're sitting with equal highs and you're not seeing price act the way you'd want it to. I think I actually remember this price action from this day as well. I'm pretty sure there was either a 2-minute or a 5-minute SIBI sitting right here. And I think this was actually around in that 10 to 11 hour, and these were silver bullet entries up here and up here. So you can potentially cut that trade and then go and look on a little bit of a higher time frame and see if your general idea is still in alignment. So maybe you were a bit early to this trade if you're taking it right here, but go and look on that 2-minute or that 5-minute and see what's happening. And you can potentially realign yourself if it trades up here. Or if it doesn't, right, and the market's still in play, maybe you get something like this and it breaks back down suddenly here. And then you potentially have a sell model you can take up here with a stop up here and target these lows again.
Thanks,
So
man.
I think it's always fine to the first rule and the focus of what we're doing is always managing your risk, and you did that well here, right? There's nothing wrong with cutting a trade early or moving to break even when you don't see it responding the way you want it to. You don't have to just accept the loss because you took the trade. I think that's something that goes through our minds a lot potentially, is like it's kind of like it's almost like a self-sabotage type thing a lot of times. Like, I enter this trade, I did that, and now I deserve to take the loss if it's going to lose. It doesn't have to be like that, right? If you take a trade and it's not playing out the way you want it to, as you'd expect price to work algorithmically, then cut the trade. That's fine. There's going to be another opportunity for you to enter, and you've mitigated your risk, and now it's going to be easier for you to recover. So, well done. I think you did really well on this trade.
I agree. Great trade. That's how you lose professionally. And technically, you didn't even lose. You went break even.
Yeah, break even. So there you
I
go.
would have saw that. I would have saw that swing point came back down after it redelivered it inside that breaker right there, where you probably put your stop loss. You see that three kind of 3-pin pattern swing point delivered, respected your breaker inside of that inverted BISI, and I would have probably went break even too, right? Not even give it the chance to try to go back up, and especially with all those relative equal highs up there. So great job.
Yeah.
All right, the duration of this trade was 23 minutes. The time of day was 9:22 a.m. to 9:45 a.m. Eastern Standard Time. So looking before the market opened, I saw that the market structure shifted to the upside, and we had formed a fair value gap. I noticed before that the market tends to be strong when the market opens. So I was expecting the price to fill the fair value gap and make it to move up. I was feeling good throughout the trade, but whenever the 935 candle formed, I got a little bit worried that the price was going to reverse back to the downside. I stayed calm through and just let price action play out. I had already had my stop and take profit set, so I just waited. We ended up hitting our take profit and continuing to rally for the rest of the day. Like we talked about in this last class, it doesn't matter about the catching the whole move. You have to understand to take profit, and that's what I did. I got my 10 handles and was out for the rest of the day. Having these plans is helping me a lot and helps me become more focused on my trades. The gray box was an hourly bearish value gap where price started rejecting, right? So up here was that gray box that he was talking about. That's where we started rejecting, but you can see really quick, right? You've got the 7 a.m. low taken at around 8:30, right? 8:30 comes, we take it, push back up, try to take out the low again. 9 o'clock hits, we have a failure swing to go lower. There's probably some SMTM here as well, but we deliver higher, right? We have that shifted market structure as he highlights. Failure swing to go lower, shifted market structure. We create a BISI, and inside this, I'll even show you too, this is a breaker. So you entered in at a breaker too. You entered in on a model that I would have potentially entered in too. Henry, will you, since I can't annotate my own screen, will you annotate this breaker? Because we have a low, a high, we take out the low, And when we take out the high, there's displacement in that same valid area, right? So that up close candle right here, to me, would become a breaker. Yep, right there. So notice where you entered in at. Inside that BISI is also a breaker, right? And you got your 10 handles, right? You had an area in which you were aiming towards, that gray box. And yeah, great trade. I mean, it's self-explanatory. Looks like it was pretty much of a breeze. You know, you had context as to why you did what you did. Timing was great, right? It played out. Great job. I'm glad that it was able to continue going the higher. I'm glad that it actually went higher throughout the rest of the day, and you didn't catch it all, because that's good, because you're not always going to catch it all. And so having a set idea of where you're going to take the trade, following it towards that area, letting it go, and then letting go of the trade, great. All is well here. Great trade. I cannot wait to see what you do next week. Oops. 1 second. Alrighty, Henry.
This was a silver bullet short, it looks like, on Tuesday, targeting Monday's lows to draw on liquidity. My emotions were all over the place before entering this trade because I was unsure of my bias. But once I entered the trade, price went straight down to my take profit. Silver bullet. So I'm not sure what time frame this is. All right. Well, it looks like it played out. You were taking some kind of. So I don't know if this is like a 3-minute chart, maybe. Let's see, 1, 2, 3, 4, 5, 6, 7. It looks like this is like a 2 or a 3-minute chart. So potentially you had a SIBI inside of here, which maybe you traded off of, and then looking for these lows. That's good that the trade played out as you expected. I mean, you followed your model. I'd just say the one thing, just based on your comments over here, is if you're unsure about something in your trade, you don't have to put the trade on, and you can wait for another opportunity that's a bit more clear to you, right? Because the number one thing in looking for our trade setup is knowing where price is likely to go next. And you had the right idea on that. So maybe your uncertainty was just an emotional thing, fighting your technical analysis. But if you do feel that you're taking a trade out of emotion, or you're unsure when you're putting the trade on, that's an opportunity where you can take a step back and wait for another opportunity, right? Because you don't have to force this if you're not feeling good about it, especially because if you put this trade on and you're not feeling like you have the right idea, this going to stop you out could actually put you into an emotional tailspin. You have to look out for kind of things like that, right? So just be cautious of that, and remain aware of your emotions. And if you're just uncertain about your bias or what's potentially going to happen next, just take a step back, maybe go to a higher time frame and let that trade play out. You can tape read it and then find another opportunity. I think you had a good trade, right? It looks like you took a trade here inside a 2 or 3. This looks like a 2 or 3 minute time frame, and maybe you had a 1 minute SIBI in that silver bullet. And yeah, looks good.
All right. So that is that. Let me come back here. Let me share my screen and we will go over the task for this week. Alrighty, week 3. Week 3. Gonna get a little bit more challenging now. Alright, the idea behind this third task is pattern recognition. We are looking for a specific model to unfold. The model we will be all trying to identify is the 2022 mentorship model by ICT. It is up to the trader to calculate their contract and lot size. Your account balance should be the same that you finished with after week 2. Some goals: all trades must be finished by Wednesday at 11:30 a.m. So if you are trading, you need to be done by Wednesday at 11:30 a.m. Target and hold a specific 15-minute and 5-minute liquidity pool for at least 5 handles. You are now allowed to take partials. You are now also allowed to move your stop at break even. Your max stop loss should be 5 handles on ES, 10 pips on Forex, and 20 handles on NQ. Aim for this week, aim for 1.5%. Your risk, you decide your risk, right? So we are letting you decide your risk. Make sure you're responsible. Maximum 3 trades, and if 1.5% is gained or lost, stop trading. Right? So you're aiming for 0.5%. If you get it, stop trading. If you lose it, stop trading. Journal duration of trade, the size of the contracts per trade or lots, your risk per trade, your reward per trade, time of day, specific draw and liquidity targeted, stop placement, time of break even if used, emotions before, during, and after. All right. So we're giving you now we're for this week at least opening it up to you a little bit more to make a little bit more decisions on yourself, right? Before we leave, we'll go over a couple examples of the 2022 mentorship model. It's all over ICT's YouTube page too if you need to refresh on it. Everyone should have the same type of trade this week, right? We should all, when we go over our trades and we go over the model we used, they should all be the same. Okay? All good there? Any questions or concerns before we go over that 2022 mentorship model? Okay. Well, then I am going to share my screen for a second. Let me do something really quick. Okay. So with regards to the 2022 mentorship model, right, we're going to have a price swing. Right, we got a market structure shift. And a SIBI in that relative area. Right? Stop loss. And then down here, I'll actually do this really quick. This would make more sense. Take profit. Right? That's what it would look like for sells. For buys, stop loss. Take profit. market structure shift. And inside that area should be some form of BISI. Right? That's the 2022 mentorship model. Okay? So some form of relative equals high or relative equal low structure. Some clear market structure shift, whether that be a 1 minute, 5 minute, 15 minute. A SIBI or a BISI created in and around that area. And then that stop loss at that high that breaks the structure. Any questions here? Right? You don't have to try to use a breaker. You don't have to do any of that stuff. It's just anything that has a market structure shift with a SIBI or BISI inside of it. All good there? Anybody have any questions?
Thing to note is you want some sort of purge of the liquidity market.
Yep, that is true too. So with regards to that, you would want, let's say there's a high here. Right? And let's say there's a low here. Almost forgot that. Right? All good there? Everyone understand what they're looking for? There's a bunch of videos on it too, on YouTube. Any other questions, comments, or concerns? Can we trade micros?
Yeah.
Yeah, that's fine.
For every
Okay.
mini.
Yes, that's all up to you guys now. We're gonna, at least for this week, you guys can decide how you want to break it down into. Not a problem. Okay, aside from that, that's this week's task. Like I said, hopefully in the next week or so, we'll be able to have a platform for you guys to start to use. Super excited for it. I cannot wait to show you guys. Please, if you have not sent in a testimonial yet, please get that into us. We do greatly appreciate it. Let us know where you are from when you are sending these in. It's not just for me and Henry to look at. We are utilizing them. And you will get early access to the platform for 1 week before everyone else does. So super excited to share that. Still got a lot of work that me and Henry need to do on the back end to make sure that it's all ready to go. But we've been working hard on it. We're going to continue working hard on it. And hopefully by the end of this week, we've got something to show. I'm going to chat with Henry and try to see what all we can maybe accomplish. But just know that he will not be here. He will be on vacation. The testimonials or text is fine. Just a 2-sentence text is great, and just let us know where you're from. We would greatly appreciate it. It goes a long way. It goes further than you guys think. So much love to that. We will make sure that same call next Sunday, 10 o'clock. We'll make sure to get a midweek review out, and hopefully on Wednesday when we do shoot that midweek review out, we will give you guys some form of update on the platform release as well. Other than that, Henry, do you have any other comments, questions, or concerns?
I think that's it from me. Excited to see everyone's progress next week. Yeah, I'll be out of town next weekend, but I'll be sure to submit my trade too, so Carson can take a look at it too. And I'll look forward to watching back the recording and see how y'all do next week.
Thank you guys so much. Appreciate it. Make sure you guys trade safe this week, volatile week ahead. And always feel free to reach out if you guys have any other questions. Thank you so much.
All right, take care, y'all.